An IRS notice is not just a piece of mail, it is a decision point. And what makes it dangerous is not always the amount shown on the page. Sometimes the real danger is what the notice causes you to do next. Some people freeze. Some people panic and pay without checking. Some people put the envelope in a drawer and hope the problem goes away. And some people respond too quickly, send too much information, or say things that were never asked. Each of those choices can turn a small issue into a much bigger one. That's the part many people miss. The IRS notice itself may be simple. It may be asking about a missing form, an income mismatch, an identity check, or a proposed change to a return. But the taxpayer's response can either protect the situation or make it worse. Think about that. One letter can create fear, fear can create delay, delay can create penalties, penalties can create cash flow pressure can create poor financial decisions, and suddenly what began as a notice becomes a business problem, a household problem, a leadership problem, and sometimes even a confidence problem. That's why IRS notices should not be handled emotionally. They should be handled strategically because the question is not simply, what does the IRS want? The deeper question is this: when the government sends you a notice, do you know how to slow down, think clearly, protect your rights, and respond from a place of strategy instead of stress? And that's what we're unpacking today. Hello, I'm Jovi Shari Brown, and welcome to the Sweet Spot Tax Podcast. In each episode, we take a deep dive into a Georgia Peach income tax sweet spot source document written by me. Guided by brief musical transitions, we'll explore 5 key areas: the deep dive, the psychology behind it, the sweet spot shift, actionable takeaways, and the clarity check. Along the way, we'll expand on the source document and explore the ideas, strategy, and questions behind it. Our goal is simple: to take complex topics and break them down into clear, practical ideas that are easy to understand and apply. Whether the topic is tax strategy, business growth, financial clarity, navigating IRS challenges, or decision making, the objective remains the same: to help you think more clearly and move more intentionally. Let's align with your sweet spot and begin today's deep dive. Let's dive into this. Most IRS notices do not begin as personal attacks. They begin as information mismatches. The IRS receives information from employers, banks, brokerages, firms, payment processors, retirement plan administrators, and other third parties. Those forms may include W-2s, 1099s, 1099-Ks, 1099 NECs, 1099 INTs, 1099 DIVs, 1099 Bs, and many others. Then IRS systems compare that information to what appears on your tax return. If something does not match, a notice may be generated. That is why one of the worst things you can do is assume every IRS notice means you're in serious trouble. Sometimes it means the IRS believes income was left off a return. Sometimes it means a payment was not applied correctly. Sometimes it means the IRS needs you to prove your identity. Sometimes it means a deduction credit or filing position is being questioned. And sometimes the IRS is wrong. The last point matters. A notice is not always a final decision. Many notices are proposed changes, but if you do not respond by the deadline, the proposal can become much harder to challenge. That is where strategy begins. The first move is to identify the notice. Every notice has a number or letter code. That code matters because it tells you what type of issue you are dealing with, such as a CP 2000. Often that means the income reported to the IRS by a third party does not match what was shown on the return. A letter 1058 is much more serious because it may involve a final notice of intent to levy. Those are not the same problem, so they should not be handled the same way. This is one reason vague panic is so expensive. When people panic, they often treat every notice like a disaster. But a strategic person asks better questions. What tax year is involved? What form or issue is being questioned? Is the IRS proposing a change, questioning information, verifying identity, or threatening collection action. What is the deadline? What rights do I have? What proof do I need? What should I avoid saying or sending? That last question is important. Many people believe that if the IRS asks for one document, sending 20 documents is safer. It's not always safer. A precise response is usually stronger than an emotional response. If the IRS asks for proof of one item, you do not need to open up your entire financial life. You want to answer the question asked. Support your answer with evidence and preserve a clean record of what you sent. That's why the second move is to gather the original return and the supporting records for the year in question. It can become cumbersome to evaluate the notice from memory. Memory is not documentation, and when stress is high, memory becomes even less reliable. You need the filed return, you need the schedules, you need the W 2s, 1099s, receipts, account statements, proof of payments, corrected forms, or other records tied to the issue. Then you compare. This comparison step is where clarity begins. Did the taxpayer forget a 1099? Did a brokerage statement report stock sales but the cost basis was missing? Did estimated tax payments get applied to the wrong year? Was a business deduction questioned because the support was not attached? Was identity verification needed because the IRS suspected fraud? A notice is easier to handle when you can name the problem. Let me give you a few examples. A high income professional receives a CP 2000 notice showing additional tax due because the IRS says investment income was not reported. At first, the amount looks frightening, but after reviewing the brokerage statement, it turns out the IRS saw the gross proceeds from a sale but did not have the correct cost basis. The taxpayer did not actually owe what the notice showed. A careful written response with the correct support changes the outcome. Now consider a business owner who received a notice about a payroll tax deposit. The owner is busy, overwhelmed, and assumes the bookkeeper handled everything. The notice sits unopened for weeks. By the time it gets attention, penalties have grown, and the business is now dealing with cash flow stress that could have been reduced with a faster response. Here's another example. A taxpayer receives an identity verification letter. It does not say they owe more tax. It says the IRS needs to confirm who they are before processing the return. The taxpayer ignores it because it looks suspicious. Months pass. The refund does not arrive. The tax account is frozen. What felt like caution became delay because the taxpayer did not verify the notice through the proper channels. These examples show something important. The notice is only one part of the story. The response is the strategy. After identifying and comparing, you decide your position. You may agree, you may disagree, you may partially agree. Each position requires a different response. If you agree and you can pay, you may pay by the deadline and keep proof. If you agree but cannot pay, ignoring the balance is not a strategy. You may need to explore a payment plan, currently not collectible status, or another resolution path depending on the facts. If you disagree, you need more than frustration. You need evidence. You need a clear written explanation. You need copies, not originals. You need to send the response to the correct address, and you need proof that it was mailed on time. This is why certified mail with return receipt matters. It is not about being old fashioned, it is about creating proof. In tax matters, proof is power. The IRS is a document driven system. Feelings do not carry much weight. Good intentions do not carry much weight. Verbal explanations may not protect you if there is no written record. But a timely response with clear support can change the direction of the issue. It can protect appeal rights, it can prevent unnecessary assessments, it can reduce penalties, it can stop a small problem from becoming a collection matter. And in more serious cases, it can help determine when professional representation is needed. That is especially important if the notice involves a large balance, a formal audit, suspected fraud, liens, levies, wage garnishment, bank account seizure, or a final collection notice. At that point, the question is not, can I handle this myself? The better question is, what is the cost of handling this incorrectly? Because sometimes representation is not an expense. Sometimes it's risk control. So, what's the psychology behind it? IRS notices create a strong emotional reaction because they combine three things some people are naturally unsure of how to handle: uncertainty, authority, money. That combination can trigger a stress response very quickly. When people feel threatened, the brain often shifts away from clear thinking and toward survival thinking. That is why a person who is usually smart, calm, and successful can open an IRS letter and suddenly feel confused. It is not because they lack intelligence, it is because stress changes how people process information. Under stress, some people fight. They become angry. They blame the IRS. They blame the preparer. They blame themselves. They may write a long emotional letter that does not answer the actual issue. Some people flee. They avoid the notice. They put it aside. They promise themselves they will deal with it later. But later becomes next week, then next month, then the deadline passes. Some people freeze. They read the first few lines, feel overwhelmed, and stop. They may not even reach the part of the notice that explains the deadline, the appeal rights, or the steps to respond. This is why emotional intelligence matters in tax matters. Emotional intelligence does not mean you have no fear. It means you can notice the fear without letting it drive the decision. That distinction is powerful. When people personalize the notice, they may think, I'm in trouble, or I did something wrong, or the IRS is coming after me. But when they depersonalize it, they can think, there is a calm here, there is a deadline, there is a document trail, there is a response position, there is a next step. That shift changes everything. It moves the taxpayer from shame to structure, and structure lowers stress. There is also a behavioral finance issue here. Many people delay dealing with tax notices because they fear bad news, but delay rarely reduces the cost. In many cases, delay increases the cost through penalties, interest, missed deadlines, or lost options. A notice should be treated like a business problem, not a personal insult. Avoidance feels safe in the moment, but avoidance often transfers today's discomfort into tomorrow's crisis. There's also overconfidence. Some high income professionals and business owners are used to solving complex problems. That can be a strength, but it can also lead them to underestimate tax procedure. They may assume, I can explain this over the phone, or this will work itself out, or I will just send everything I have. Tax procedure does not reward assumptions, it rewards precision. Another pattern is scarcity thinking. When a notice shows a balance due, the mind may jump immediately to fear. What if I can't pay? What if this hurts my business? What if they garnish my wages? What if this never ends? Those questions may feel responsible, but they're often fear based. A better first question is the amount correct? Because paying an incorrect notice quickly may feel like relief, but it may not be strategy. The goal is not to react fast. The goal is to respond well. We'll continue our discussion in a moment. First, a brief word from Georgia Peach Income Tax. Financial success creates opportunity, but it also creates complexity.
Tax decisions affect more than forms. They affect your cash flow, your business, your peace of mind, and your long term financial future. That's why the Sweet Spot Tax podcast is powered by Georgia Peach Income Tax, strategic tax advisory, and IRS representation built for clarity. Whether you're planning ahead, facing an IRS notice, dealing with back taxes, organizing your business, or seeking a clearer path forward, Georgia Peach Income Tax helps you move from stress to strategy and from uncertainty to clarity. Visit www.georgiapeachtax.com to access tax calculators, educational resources, IRS tools, AI assisted insights, and practical guidance designed to help you make smarter financial decisions before money moves. If you're looking for strategic tax advisory, IRS representation, or personalized support, call 229 395 3625. And if you'd like ongoing education, tax insights, live discussions, and access to everything from free resources to premium and VIP tax strategy experiences, join the Sweet Spot Tax community on School. Because the goal isn't simply filing a tax return, the goal is making better financial decisions with confidence. Visit www.georgiapeachtax.com, call 229 395 3625, or join the Sweet Spot Tax community on School today. Georgia Peach Income Tax, protection, strategy, financial clarity.
Most people think the IRS notice is the real problem. The real issue is the decision system behind the response. That's the sweet spot shift. An IRS notice is not only a tax document, it is a test of your financial operating system. Do you have organized records? Do you know where your filed returns are? Do you know who reported income to the IRS under your Social Security number or business EIN? Do you know how estimated payments were made and applied? Do you know the difference between a proposed assessment and a final collection notice? Do you know when to respond yourself or when to get help? This is where the conversation moves from compliance to strategy. Compliance asks, did I file the return? Strategy asks, can I defend what I filed? Compliance asks, did I pay something? Strategy asks, was the amount correct? Was the payment applied properly? And do I have proof? Compliance asks, did I answer the IRS? Strategy asks, did I answer the exact issue, preserve my rights, and protect myself from future exposure? That is a very different level of thinking. Many taxpayers only organize their financial life when there is a problem. But the time to build a tax defense system is before the notice arrives. This does not mean living in fear of the IRS. It means living with structure. It means having clean books. It means saving source documents. It means reviewing forms before filing. It means tracking payments. It means opening mail. It means not treating tax records as clutter. For business owners, this is even more important because IRS notices can reveal deeper operational issues. A payroll notice may reveal weak internal controls. A 1099 mismatch may reveal poor vendor tracking. A sales report issue may reveal bookkeeping gaps. A tax balance may reveal cash flow planning problems. So the notice becomes a mirror. It shows not only what happened on a tax return, it may show what is happening inside the financial system. And for high income professionals, the lesson is similar. Success can create complexity, multiple income streams, investments, real estate, equity compensation, retirement distributions, business income, and side ventures can all increase the chance of mismatches and documentation issues. The more complex your financial life becomes, the more important your response system becomes. So the shift is this: do not ask only, how do I make this notice go away? Ask, what is this notice revealing about how I manage financial information, risk, deadlines, and decisions? That question turns a stressful event into a strategic lesson. If today's discussion resonates with you, here are 6 practical actions you can take. Number one, open the notice immediately and read the entire notice before reacting. Do not skim only the amount due. Do not stop at the first scary sentence. Look for the notice number, tax year, response deadline, issue, proposed change, payment instructions, appeal rights, and response address. A notice cannot be managed clearly until it is understood clearly. Number two, create a notice file. This can be digital, physical, or both. Put the notice in the file. Add the original return for the year involved. Add the supporting documents tied to the issue. Add proof of payments, transcripts, corrected forms, letters, notices, notes from any calls, and this file becomes your command center. Do not rely on scattered emails, random screenshots, or memory. Number three, compare before you agree. This is critical. An IRS notice may look official, but official does not always mean correct. Compare the IRS claim to your filed return and your source documents. If the IRS says income was missing, identify the form. If the IRS says a payment was missing, find the payment proof. If the IRS adjusted a credit or deduction, review the original support. Do not pay only to escape discomfort unless you know the amount is correct. Number four, respond in writing with precision. If you agree, follow the instructions and keep proof. If you disagree, explain why in a clear, concise letter and attach copies of the documents that support your position. Do not send original documents. Do not send unrelated information. Do not turn a focused issue into a broader review by volunteering unnecessary material. Send the response to the address on the notice and use a method that provides proof of mailing. Number five, know when to get representation. If the notice involves a large amount, a deadline you do not understand, a formal audit, a fraud concern, a lien, a levy, wage garnishment, bank account seizure, or a balance you cannot pay, get help quickly. Professional representation can help protect your rights, manage communication, organize evidence, and reduce the emotional pressure of dealing with the IRS directly. And here is one more important point. Number six, stop treating IRS notices as shameful. A notice is not a character judgment, it is a document. Treat it like information. Evaluate it, respond to it, learn from it. Then improve the system that allowed the issue to surface. That is how you move from fear to control. We've spent today's episode discussing IRS notices, but perhaps the bigger lesson isn't how to answer a letter from the IRS. Perhaps the deeper lesson is how you respond when pressure enters your financial life. Because pressure reveals systems, it reveals whether records are organized, it reveals whether decisions are reactive or strategic, it reveals whether fear controls the process or clarity leads the process. It reveals whether you have built a financial life that can withstand questions. That matters far beyond taxes. In business, in investing, in leadership, and in personal finance, the people who make the strongest decisions are not always the people with no problems. They are often the people with better response systems. They know how to pause. They know how to gather facts. They know how to separate emotion from evidence. They know how to ask for help before the issue becomes larger than it needed to be. That is financial maturity, not perfection. Maturity. A tax notice may feel like an interruption, but it can also become an invitation to clean up records, an invitation to understand your financial life more deeply, an invitation to stop avoiding what needs attention, an invitation to build a stronger system for the future. The goal is not simply to survive the notice. The goal is to become the kind of person, professional, or business owner who does not lose clarity when the pressure rises. Because the IRS notice is not just asking for a response, It is asking whether your financial life has enough structure to answer. Think about that. So here's the question to sit with. If an important financial notice arrived today, would your first reaction be panic, avoidance, or strategy? That's today's clarity check. Thank you for listening to the Sweet Spot Tax Podcast. For more tools, resources, and strategic insights, visit www.georgiapeachtax.com. Join the Sweet Spot Tax community on School or call 229 395 3625. Again, visit www.georgiapeachtax.com. Join the Sweet Spot Tax community on School or call 229 395 3625. Whether you're looking for tax strategy, IRS representation, or greater financial clarity, we're here to help. Georgia Peach Income Tax Protection, Strategy, Financial Clarity. Until next time, align with your sweet spot and move with clarity.